And I know that when I got into my first time home buying, I was a teacher full time at a local school district, and so they were advertising 100% financing, so I didn't have to have any down payment. I just had to cover closing costs. Not my wisest move financially. This was pre-Dave Ramsey and pre-financial coaching, but that was one of those things that when we were talking about the PMI, private mortgage insurance, to cover the lender if I default on the loan. It took me several years for that to roll off, but there's been some legislation changes with, for instance, the FHA loans. So do you want to speak a little bit to that and the costs involved with the different types?
Typically, whenever you hear first-time home buyer loan products, almost all of them are FHA. Why is that important to you, the potential home buyer borrowing money? Well, with FHA, number one is they have lower requirements to get you in the door. Lower credit score requirements, lower down payment requirements, but also they'll let you borrow more, meaning to your income, what they call debt-to-income ratio. But then it becomes more expensive because you'll pay a higher interest rate typically. There's more fees. And just an example on the fees is a private mortgage insurance. I just did a quick calculation. Private mortgage insurance is basically foreclosure insurance. So if you got a $150,000 loan, FHA, with their minimum down payment, you would have to pay about $170 a month on top of the principal, interest, taxes, and insurance, then PMI, an extra $170 a month, or almost over $2,000 a year on a standard conventional loan with PMI. If you put 10% down, 15-year fixed rate, which I know we all three believe in the same model on that, your payment for PMI is $28. So that's $140 a month difference, which for a lot of us is how much we spend in fuel a month difference.
A fraction of what I spend in fuel, yes.
Wow.
Yes. And I'm thinking too, okay, so people are watching this, we're getting into helping them think this through. This is a prime example of, if you are willing to educate yourself on what you want to do with the first-time home buying, if you get with a financial coach, we can save you $150 a month just by making sure that we help you think conventional, not FHA. And if you're not ready for conventional, then finding a way to get that $150 a month set back so that you've got emergency funds, you've got your down payment, you don't end up spending thousands of dollars literally over the life of the mortgage loan.
Absolutely. And we're all huge on the 15-year mortgage, and if you get a 30-year mortgage, it takes you forever to get to that spot where there's no PMI. And the one clarification I wanted to give as well is, just because FHA is kind of the exclusive first-time home buyer product, you as a first-time home buyer can still get a conventional loan. So I don't want you to think you're excluded from the conventional, but bottom line is it's going to be less costly to get the loan with a conventional than it is going to be an FHA almost every time. And I just advise, to get a quote on all three of them so you can see for yourself what's the interest rate going to be on a conventional and the FHA, and then also what are the costs, what's the PMI, because when you put the numbers in front of you, it's going to be pretty easy which way you're going to go.
Right. And let me add this. I just want to add that this mortgage industry is cyclical. So right now, FHA is the most popular program right now. But a few years ago, 2004, and even in the early 2000s, conventional was a lot more popular than the government loans were. Just since the recession, the government kind of got more involved in making things more assured as far as finances are concerned. So that's kind of like the most popular program. But you're right, there's all type of programs, and even in maybe on another segment, we can talk more about, there's land contracts, seller carrybacks, lease options, and things like that. But I just wanted to add that FHA is popular right now, but yeah, you're right. There's a lot of different options out there to get finances for your first-time home and even investment property too.